All right, good morning, traders. Good to see everybody. Let's do a quick audio check. Good morning, Arvin, Alfonso. Good morning, Jose. Good to see everybody. All right, so today is Fed Day, which I'm pretty sure we probably got that around 2:30 p.m. Eastern. So 2 to 2:30 p.m. Eastern. We got to deal with the Fed here today, but a few things to focus on. So, a lot of what we've been talking about in these morning live streams together mainly has been the tech stocks. So if we take a look here at the Qs, come on, Qs. All right, so if you look at the Qs here, guys, pretty much we've gotten the move that I was looking for, and it's always the same move. It's the move from the daily 21 EMA with the squeeze up into about +2 to +3 ATR. So the Qs, we made the move into +2 yesterday, and then if you look at the cast of characters here, you've got Amazon, and Amazon has made that push into +2 ATR. All right, so Amazon makes the high probability move. My dearest Google, same thing over here. Google has the daily squeeze a few weeks ago. The squeeze fires long, and you get the push there into +2. So in plain English, this isn't the spot to get crazy aggressive with the tech stocks. I think you save your bigger position sizes for back there at the 21. Then you're looking to take profits on this push. So I do think that's a good game plan here for the next few days. If the market gives us a little bit more upside, use that upside as an opportunity to get out of your long positions, especially here in the tech stocks. Microsoft, Google, Amazon, Facebook, they could continue to go higher, but I think you want to be thinking in terms of probabilities. And thinking in terms of probabilities, team, that's the high probability move. You build your aggressive position back here, you're looking to take profits on this push. So I think you look to take profits here today. And one thing I love to do in the morning, don't take profits today. Look, you get some momentum, take profits, I think, over the next 2 to 3 days or so. But one thing that I love to do in the morning here on the futures is let's find a couple of lower time frame squeezes, whether it be a 4-hour, a 2-hour, a 1-hour, a 30-minute squeeze. The lower time frame squeezes, they can serve as a great compass. So we got nothing here on the 4-hour. Let us check out the 2. All right, nothing setting up on the 2-hour chart. We've got to have a squeeze somewhere. Man, these charts are slow this morning. All right, so here is an hourly squeeze. Here's what I like to do. So I'm going to cancel these alerts, and I'm a big fan of not staring at chop. So pretty much what a squeeze is a whole bunch of chop, but ultimately that chop can lead to a powerful move. So here's what I'll do. All right, we find an hourly squeeze, and it doesn't have the best structure. There's no positively stacked moving averages. The 10x bars are red, but it is an hourly squeeze. So what I'll do is I'll set an alert up here at, say, +1 ATR. Give me a holler here if we can break above that level. And then I'll come down here towards support right around -1 ATR, and I'm also going to set an alert. And I'm going to kindly ask Thinkorswim to let me know if we're breaking that level. And now here's the mindset. If neither of those alerts get triggered, all the market is doing here is just chopping back and forth. If one of these alerts gets triggered, whether it's the upside or the downside, then potentially all that energy we're seeing getting built up here in the hourly squeeze, it could fire to the upside. So for conversation's sake, if you're bearish on technology stocks today, you would want to sit patiently and look for the hourly squeeze to fire short. If you're bullish, you're looking for the squeeze to fire long. So for a compass on the Qs, we got an hourly squeeze, and let's just take a look and see if we got anything on the 30-minute squeeze. You got a 30-minute squeeze here as well. So for your early morning compass, use that 30-minute and 60-minute squeeze on the Qs, and we'll do the same thing here for the S&P 500, which is just super, super lame right now. So there's no issue with the structure of the daily chart for the SPY. In terms of structure, good looking squeeze. We've held above the 21 for weeks on end now. You got the stacked EMAs. This is a good looking chart. The only thing I'm being a little bit cautious of right now, it's been a good looking chart for over a month. So you had this beautiful squeeze here for the last 4 to 5 weeks. It's had a bullish structure, yet the SPY can't even really commit to a close above +1. So in plain English, entire market here has been in that buildup of energy phase, and the weeks go by, technology's taken off, etc. The market can't get out of its own way. So it's a good looking chart, but what is the holdup here, I guess is what I'm trying to say. But let's find a couple of squeezes for the SPY, and we'll get a couple of alerts going here. Here's the real problem. I don't know if you want to call it a problem. We've been stuck inside of a 4-hour squeeze for over a week here. So, when it comes to lower time frame squeezes, I'm going to put the emphasis on the bigger time frames. So a 4-hour squeeze is more important to me than a 30-minute squeeze. Bigger the time frame, potentially the more powerful the move. But let's see. So we got a 4-hour here. So we know we're working with that. And let's dial it down a little bit. And the Qs. So the Qs had the same structure. They made the good-looking push, and that move, I think, is kind of getting towards the tail end. The S&P 500 here, we haven't gotten such a move. So nothing on the 2-hour. And let's see if we got an hourly and a 30-minute here. We'll get a couple of alerts set. Right, there you go. You got a high compression hourly squeeze, so same scoop. Let's put an alert up here at +1, just in case you get a little bit of momentum coming on in. And let's set an alert down here near support at -1. If that alert goes off, then potentially this old hourly squeeze is looking to fire short. So it's simple as that. We all understand the squeeze. It's a buildup of energy. Ultimately, as that energy gets released, it can lead to a directional move. But in the interim, in this choppiness, there's not much happening in the form of direction. So you got alert set for the SPY, you got alert set for the Qs. Now we can just sit on back and focus on a couple of setups here today. So let's look at Amazon. Amazon's a good example. There's a time to get big, big position sizing, and then there's a time where I think you want to drastically scale down the position sizing. So for Amazon, with my style of trading, time to build up a bigger position. And usually for me, the biggest position I'm going to take is a 10 to 12% position. I think you take that position back inside the squeeze near the 21 EMA, and then you're looking for that high probability move into +2 to +3. That's where I think you look to get aggressive. Once that move is already unfolded and we're knocking on the door of +2 to +3 ATR, it doesn't mean Amazon doesn't have more gas in the tank. I just think you want to approach catching any kind of continuation with smaller position sizes. So what you could do here, right, you find the daily squeeze, you build a bigger position, you're taking profits on this push, but if you're looking for a little bit more upside here for an Amazon or a Google, dial it down to a lower time frame squeeze and look for a bullish structure. So the same criteria I have for a daily chart, I'm going to apply the same criteria here to an hourly chart. So what I'm looking for is a squeeze, I'm looking for positively stacked moving averages, and I'm looking for green 10x bars. So this is a bullish structure just on a bit of a lower time frame. And taking into consideration we are extended here, I think you go about trading these hourly squeezes with a 2.5% position size. You keep it small. So for Amazon, right, got a good looking hourly squeeze here this morning, and it's lining up with an hourly squeeze in the Qs. So if the Qs end up firing their own 60-minute squeeze to the upside, you could get some follow through here for Amazon. So you look for a put credit spread or some sort of trade for this Friday's expiration, but I can't stress, you make it a small position. You make it a small position because as good as Amazon might look and as good as technology might look, we're always thinking in terms of probabilities. And the probabilities of a move back towards the downside, those probabilities start to grow once we made the nice push here. So you got an hourly squeeze there for Amazon. If the Qs can fire their own squeeze, I think that leads towards a pretty good push here. And then for Google, which again is extended, you can look for some continuation here, but it's not the time to load the boat. So scale down in position size. And here's what I'm doing with Google. And this kind of, this is a good reflection of the mindset. Keep in mind, we all got different account sizes, we all take different position sizes, but with Google, kind of drive the point home here, few weeks ago, we get the daily squeeze, and this is my go-to pitch. Right? That's the setup I want to take 95% of the time. Daily squeeze, we're in the buy zone. We had positively stacked moving averages. So I built a good size position here in Google. We got the follow through. So on my end, with I think 25 contracts, that was about a $15,000 profit. So here's the mindset. You get aggressive here, you make the bulk of your profits on that push. And then if you want to look to continue to play Google, you simply look for lower time frame squeezes, but scale down position size. So took the profits on that daily squeeze, Google chops around a little bit, and then we have this 4-hour squeeze here. So I built a few positions in the 4-hour squeeze. I built another position here inside the hourly squeeze, but from a position sizing standpoint, I'm not risking too much capital. I want to make my money on that daily squeeze, and I'll try to milk Google for whatever momentum is left, but I'm going to do so in a fashion where if Google craps the bed here, even if I take a max loss on both of those trades, I'm not going to lose the $15,000 from what I consider to be the high probability trade. The daily squeeze at the 21, looking for the push towards +2 to +3. So for Google, you scale down position size. We need the Qs to fire their own 60-minute and 30-minute squeeze long, but if they can, here's a 30-minute squeeze for Google, no stacked EMAs, you got some green 10x bars, and you got an hourly here. So pretty much for technology, it's the same scoop across the board. Microsoft, Facebook, Google, Amazon, and obviously the Qs themselves, they've all made that nice move into +2 to +3. If you're looking for some continuation, go looking for an hourly chart, a 30-minute chart, scale down in position size, but focus on that same bullish structure. Just like with a daily chart, I want my 1-hour chart to have stacked EMAs. I want there to be green 10x bars, and I want it to be hanging out here in the buy zone. So be patient today. We got the Fed, and of course with the Fed here, that can throw a wrench in a good-looking setup. So I think this morning you want to be a little bit patient, but if you are looking for a little bit more upside this week, I'm liking technology here. Now on the other side of things, we talked about the S&P 500. It's a good-looking daily chart, but it's a daily chart that just continues to trade sideways. So if you look at a few different sectors, technology looks good. The semiconductors look good, but there's something here putting a little bit of pressure on the SPY. So as Amazon, Microsoft, Google, etc., they're making a nice push over the last week or so. S&P 500 is just flatline. So a few different sectors, I don't want to say completely breaking down, but there's a few sectors that are losing structure and showing a loss of momentum that could potentially put a little bit of weight on the S&P 500. So one sector that comes to mind here is the transportation sector, IYT. And over the last handful of months, this was one of the leaders. You had energy, financials, industrials, and the transports. While technology was taking a bit of a nap there, transports are leading the way. However, we have a bit of a loss of structure and a loss of momentum. The histogram has gone negative, so there's no more bullish momentum here. You've lost your stack moving averages, and you're looking at 1, 2, 3, 4, 5 closes under the 21 EMA. Now, does this mean the transports have to roll over and crash from here? Not necessarily, but thinking in terms of, what are we looking for from a squeeze? This is not a bullish structure. We're still pretty much here in the buildup of energy phase, but once you lose your stacked EMAs, once your histogram goes negative, and once you start to hang out under the 21, there's just a growing probability that phase 2 of the squeeze, the release of energy, could potentially take place to the downside. So for the transports, not completely falling apart, but that is a loss of momentum. And if you look at, say, a FedEx here, as goes the sector, goes the individual stocks, FedEx has taken a pretty good thumping. It's a daily squeeze firing short. And then for UPS here, it has taken equally as good of a thumping over the last few days. So, okay, transports, they're a little bit sketchy here. They're not really doing the market any favors as far as an explosive move higher. How about the industrial sector, XLI? So think of names like Caterpillar, 3M, UMP. Again, this chart isn't collapsing here, but we are seeing a loss of momentum. The histogram goes dark blue, so we're losing a little bit of bullish momentum, no positively stacked moving averages, and we have 1, 2, 3, 4 closes under the 21. We're not breaking down, But in terms of phase one of the squeeze is the buildup of energy, phase two is the release of energy, there's a greater chance that we fire to the downside once you have exhaustion, once you have multiple closes under the 21, and you lose your stacked EMAs. So the industrials are a little bit iffy here, I would say. And then you can look at the financials. It's not breaking down. We're still in phase one of the squeeze, but exhaustion, 2, 3, 4 closes under the 21 doesn't mean we have to fall apart. It's just that, these are things to keep an eye on, is all I'm trying to say. If we're looking for the S&P 500 to make this, big push here into 4,300, we're going to need some leadership. Technology's already made the move, so to me it's like, all right, clearly technology isn't enough here to pull the entire market forward. Take into consideration the Qs are already a little bit extended at +2. Even if we keep going here, I don't think that's going to wake the market up. So, this all kind of fits in with the mindset of if you got some positions in Google's, Amazon's, etc., or really any long positions right now, we get a few more days of momentum into the end of the week. Personally, I'm taking consideration of locking up those profits, and then we'll see how next week goes. But I do think we start taking some consideration to a few shorts here. So the transportation sector, I think if we get a bounce back up towards that 21 EMA and get rejected, that's a good short setup with a call credit spread. And then thinking in terms of 4, 5, 6 weeks down the road, I like Netflix for a short here. The daily chart is all kinds of busted up. So let's take a look at this. So when you see negatively stacked moving averages, don't go long. Just make that a rule in your trading. If a daily chart has negatively stacked EMAs, just don't freaking do it. Don't go long. So that's not a good structure to the daily chart. We are in a buildup of energy here in the squeeze. And then if you look at the weekly chart, I don't think this is very bullish looking either. Come on, weekly. So you want to judge stocks based on what they've been doing in comparison to what the overall market is doing. So for the last 2 months, what have the indexes done? They continue to grind higher, and the Facebooks, the Amazons, the Googles, the Nvidias, they've made a really nice push here. However, even with overall strength in the market, look at what our pal Netflix has done for the last 2 months. Just completely trade sideways inside this weekly squeeze with your histogram completely bleeding out here, no positively stacked EMAs, under the weekly 21. Build up of energy, but based on the structure, this to me looks like the energy could get released to the downside. And if you're looking for a move on a weekly chart, you're looking for a move into +2 to -2, and -2 lines up with about 440. So, I don't think Netflix falls apart here if the market holds up, or it especially doesn't fall apart if the market goes higher from here. But this daily squeeze on the SPY is just getting drawn out here. So as the industrials lose some momentum and the transports, etc., if over the next few weeks we do see the market top out and begin to roll over a bit, it looks like Netflix is just waiting on that move to finally fire a short. So I think an out-the-money call credit spread on Netflix sometime next week could be of interest. And everybody's favorite, Tesla over here, I think this is shortable from the weekly squeeze perspective as well. Now, I don't want to short it if the market is holding up okay, but same thing as Netflix. Last 2 weeks or so, let's see, 1, 2, 3, 4, 5, 6. Last month and a half, the market continues to grind higher. Tesla just does not participate at all. We're in a weekly squeeze, but we're pinned under the 21, no stacked EMAs. Market rolls over sometime soon. I think we can easily see this weekly squeeze fire a short for a move down to 500, 450-ish. So let's not get ahead of ourselves on the short side, but I think a few things to keep an eye on here. But for me, the next 48 hours, I'm going to be looking for a little bit more upside. So be patient with the Fed today. Have your alert set here on those squeezes that we saw earlier on both of the indexes, and make your life easy. If neither of these alerts goes off, guess what? There's probably not much happening here. Once one of those alerts goes off, there's our first potential of the day for a little bit of direction, whether the squeeze fires long or fires short. So that's my focus. That's my spiel. I'm sticking to it. I have a little bit more exposure here on Google that I would like to work my way out of elegantly here this week. Thinkorswim, you're killing me with the charts this morning. It's a beautiful looking hourly squeeze here on Google. Looking to work my way out of those trades for some profits over the next few days. And then we have a swing position here in Costco. God, these charts are slow. Beautiful daily squeeze in Costco, so we got a put credit spread there. And then Playboy. Playboy is doing me dirty, and not like it did back when I was a teenager. So here we go. So for Playboy, I'm going to take this trade literally every single time it comes across my screens. When we took our entry, we had a daily squeeze. Histogram was turning the corner. You had positively stacked moving averages. You had red 10x bars everywhere. Every time that pitch is thrown my way, I'm going to freaking swing at it. However, trading is just a numbers game. So you focus on these kinds of setups. Every 50, every 100 trades, you're going to come out on top. However, not every single trade obviously is going to be a winning trade. So for Playboy here, everything looks picture perfect. And now you start to lose some structure. So I'm still holding on to the position, but that clearly is a trade at the moment that isn't working out. But so goes the game. Yeah, so Amazon with Prime Day coming up. Amazon is a toughie right now because the daily chart's finally coming back to life here. And don't forget with Amazon, we have had a weekly squeeze for what feels like almost a year now. So it's not quite a year, but you got this super, super bullish weekly squeeze. I mean, this is beautiful. Beautiful weekly squeeze. Stacked EMAs, green 10x bars, histograms going positive. If I had confidence the market was going to continue to rally in July, August, September, I would be building a pretty big position here in the weekly squeeze. And I don't think you got to rush into this. Maybe the market doesn't top out this month. Maybe we do continue to rally July, August, September. Even though I like that weekly chart, based on the daily chart and based on the fact we're up here at +2 ATR, in my opinion, it's just not the time to load the boat on Amazon. If you built your position back here, hey, ride it off into the sunset. But the danger of building a huge position here, just as easily as Amazon could go higher, we could also get the push into +2. You come in here chasing, and then you're getting a nasty flush right back down towards the 21. So, maybe technology continues here, but I think hopefully we're all in agreement. The time to get crazy aggressive with position sizing in tech stocks, I think that ship has sailed here. If you didn't get crazy aggressive back here, and by crazy aggressive, I mean, what's your max position size? 5%, 10%. You save that max position size for that kind of entry back here. Once this move unfolds into +2, if you want to keep on trying to milk it, then do your thing, but just scale down in position size. Because I've done this in the past, and believe me, it freaking sucks. I'll build my position in the Google daily squeeze. I'll catch the move I'm looking for. I'll have a nice, big, profitable trade. But in the past, I would keep forcing the issue. And of course, ultimately, Google ends up coming back against me, and I'm giving back all those profits. So just scale down in position size when things are this extended if you do want to keep on keeping on. But listen, y'all, my bad for not getting to too many questions. We had a lot to cover this morning, so if you're in the Focus Trades Discord chat, which you can find in the description of these videos here on the channel, you got any questions, I'm more than happy to answer them there. If you're over at Simpler, I will see you animals in about an hour. But for the rest of you, trade safe and be patient. I really appreciate you spending some time with me here this morning, and I look forward to seeing you again on Friday. Best of luck today. Be patient. And we got the Fed. So focus on internals, focus on the volatility index, focus on protecting those profits. Talk to y'all soon.